She is a qualified chartered accountant, tax advisor, and professional accountant who runs her own consulting and advisory firm in Kimberley since April 2023. She has over 14 years of industry experience, and prior to her launching into business, she was employed as an audit tax specialist at the South African Revenue Service, where she handled various audits across various tax types. Hello. Millicent is passionate about tax disputes, resolution, which has resulted in millions in tax savings for her clients. Millions. Tax administration, financial wellness, and taxpayer education so that taxpayers know their rights and responsibilities. Millicent holds a MCom tax degree from NWU, BCom honors degree in accounting from UJ, and a postgraduate diploma in financial planning from UFS. She's a devoted wife, a mother of 2 girls, a strong believer in personal development, leadership, empowerment, and most importantly, Jesus being the center of her life. Let's give Millicent a standing ovation. Welcome, Millicent. Welcome, sis.
Good morning, everyone. Before I start, I'd like to honor you, Pastor Mel, Pastor Tim. Thank you for this opportunity. I remember when you called me, I think in the days that led up to that, you were talking about keys. And the first thing I said, I'm like, Pastor, these are my keys. So I'm really grateful for this opportunity. And my responsibility today is because you guys are business people. And we all know if you're a business person, tax is inevitable, you know. Before we start, I would like to just get an idea of the audience in the room. So I know there's people who are maybe about to start, there's people already in business, and of course there's people with abnormals. Today I'll be talking about taxes. As she has mentioned, I'm not even going to talk about who I am, where I'm from. You've said a mouthful. So the purpose of today, I will be providing guidance and awareness of your tax responsibility. We'll tackle issues of compliance. And I know maybe you might think this is not something that you need, but I know for sure a lot of business people have issues with tax. Or maybe they don't have issues with tax, but they don't even know how to go about it, you know. So I think it's something that we need to talk about and not be shy about getting into such topics. We're also going to talk about frequently asked questions. And these frequently asked questions are in terms of tax planning. So you'll find people walking to my office and asking me this. And I feel like these things are important for you to plan ahead. And then I'll also share about how to deal with audits, assessments, as well as tax debt. And that's the elephant in the room, tax debt. Okay, just a background on taxes. Taxes were introduced in South Africa in 1914, and they were introduced in order to fund government expenditure. So you know we have issues across South Africa. I'm sure even any other countries that are here, there are taxes, and they are there to fund government expenditure. And for a well and balancing state, a responsibility is placed on the society to pay their taxes, and there's also a responsibility on government to deliver goods and services. So it's not just one-sided where you are paying taxes. The government also has a responsibility. So you would find that you are saying, as an employee, I'm paying a lot of taxes. The government has a responsibility to also make sure that as the citizens of that country, you are well taken care of because of the taxes that you are paying. So there are multiple tax types, but just for the summit, we'll talk about income tax, VAT, and pay-as-you-earn, because I think it's something that most of you might come across as employers, as well, yeah. So for income tax, let's start with people who are residents, tax residents of South Africa. Tax residents of South Africa are taxed from income that they receive in South Africa and out of South Africa. But if you're somewhere, maybe for example, the UK, and you do business in South Africa, you'll just be taxed on the income that you make in South Africa. And in order for you to be taxed, you'll be taxed on your taxable income. For simple terms, I'll just call it business profit, right? Just to make it easier for you. I don't want to use like big terminology and you don't understand, but you'll be taxed on your profit, right? And then for VAT, if you're a VAT vendor, you don't automatically qualify to be a VAT vendor. You need to register to be a VAT vendor. And if you're a VAT vendor, once you're qualified or registered to be a VAT vendor, then on your supplies or the services and goods that you offer to your clients, then you can add 15% on that. I know, if all you guys know that in the past, when the budget speech was announced, there was like a proposal to add a 0.5 onto your VAT, but that has been postponed for now. But in the event that it does happen, just know that you as business owners need to change your invoicing system. Some invoicing systems will automatically change, but if you're still doing things manually, just remember to change your VAT system to also then include that 15.5, or if it will be 16, whatever the VAT rate will be then. The other thing is that if you're VAT registered, you're able to then claim that 15% that your suppliers charge you when you buy from them. And then lastly, with pay-as-you-earn, if you're an employer, you have the responsibility as the employer to withhold pay-as-you-earn and UIF from your employees according to their remuneration. And this is, the tax that you collect is according to the tax tables. If you guys don't know, it's those tables that you start paying taxes at 18% up to 45% if you're earning above 1.8 million. And this is for your employees. You'll find that most companies, not most, in fact, some companies, they will withhold pay-as-you-earn and then not pay that pay-as-you-earn over to SARS. Just to give you a note, that is a criminal offense, because at the end of the day, when the employees submit, or rather have to submit their tax returns during filing season, because they have paid tax, if you don't submit that pay-as-you-earn to SARS, then they'll be in a position where they have to pay, whereas pay-as-you-earn has been withheld from them. So just some statistics around the collections of taxes. Corporate income tax came in third in collections at 323 billion rand that was collected. So you guys, if you're paying taxes, you contribute to that 323 billion that was collected by SARS. Second was VAT. As you know, VAT is an indirect tax, so everybody really contributes to this. But if you're VAT registered, then obviously you also fall under the statistic where SARS collected 454 billion rand. First is then the employees. I'm sure there are employees in the room who are the biggest contributor in SARS, and that is not in SARS, but within our fiscus, it's 733 billion rand. Just to give you some insight, in 2024, on SARS's register, there was 3.6 million companies on register, and only 1.1 of those companies that are on register were assessed, meaning they submitted their returns. So there's a big gap, there's still a big gap of people who are not submitting their returns. It could be that people registered companies and they're not using, I know there is quite a lot of people who have companies that are registered and they're not using those companies, they could fall under that. But also there are people who are evading tax or just don't know anything about tax and they're not submitting their returns. So if you're one of those, I'm just urging you, you can see that the receiver of revenue is very strict now. They're very hard on, and you don't want to find yourself on the wrong side of the law. So if you're that person, find somebody who's suitable, who can assist you with managing your tax compliance as far as that is concerned. And also, if you're somebody who knows that you are doing a lot of tendering, you know the first thing they want is tax compliance. You know, that's the first thing. And you don't want to only consider your tax compliance at that point where Department of, I don't know, Correctional Services says, hey, we want your tax PIN. And you are only gonna start with your bookkeeping at that point, you know. So that's just a heads up for you. So for my people who are still in the process of registering, or you are going to register, you can either register on CIPC or Biz Portal for your company. You can also register your bank account at that point. And one thing to note is that once you register your company, you automatically get a tax number. You don't need to, over and above that, register for a tax number. You get that tax number. It might not appear on your 14.3, but it is there. So if you don't have that, you can go to SARS, book an appointment, and request for a tax number notice of registration. And over and above that, what needs to happen once you register a company, you need to notify SARS that you are the public officer of the company. So a public officer is you telling SARS that I'm gonna be responsible for the affairs of this company. So yeah, write my name down. But if there are multiple directors in the company, what needs to happen is that amongst yourselves, you need to appoint one person who's going to be a public officer of that company. If the public officer resigns, you also need to change that public officer, or if the public officer dies, there needs to be a change that happens, because then obviously the information or any correspondence that comes goes through the public officer. So you don't want things to happen and you're not aware of. And once you register as a public officer of the company, then you're good to then start complying or submitting your returns or whatever it is that you need to do as far as compliance is concerned from the South African Revenue Service point of view. So as compliance life cycle starts in the form of you either registering for whatever tax type it is that you want to register for. And then once you register, then you are able to submit your tax returns. Once you submit your tax returns, then you'll be assessed on that tax return that you have submitted. So an assessment for income tax purposes could be an ITA 34, which just is a summary of what you have submitted on your tax return. And after being assessed, you could either be audited, number one, or a verification could kick in. But sometimes SARS could be happy with your assessment, and then you have either debt to pay or a refund that you need to pay. A refund that is due to you. So in the event that there is a payment that is due by you, you can then either make the payment, or you can, if you can't afford that amount that you pay, you can make a payment arrangement. Or if you have a refund, just ensure that your banking details are correct, then your payment will be made to you. In the event that you're not happy with the assessment, or let's say, for example, you are being audited, or there's a verification and additional assessment is issued, and you're not happy with that assessment, you can then either object to the assessment. If you're not happy with the objection the outcome of the objection, you can make an appeal. If you're still not happy with the appeal outcome, then you can go to court. That's if you have money, and that's when maybe tax lawyers are involved. So once that is done, ultimately there'll either be a payment result or a refund result. So if it's a refund, you don't have to do anything, money will be paid to you. I don't know if you know, if you're an employee here, you know there's like a 72-hour gap between you getting paid from the time you have submitted your return. So if SARS knows your banking details, they will pay, they won't even make a fuss out of it. But if they don't have your banking details, it might just take forever. And if you are in a payment position, you can then also make a payment arrangement or pay the assessment. Just know that the South African Revenue Service works with timeframes, so with whatever it is or any communication that they send to you, make sure that you note down the time frames. And I'm speaking like this to you as if you guys are the tax consultants, you are the whatever, because what I will find is that most business people will, when you talk to them about these things, they'll say, oh, no, I have an accountant. You know, they'll just shift the responsibility. I have an accountant, but you as the owner of the business, SARS is not gonna say, no, your accountant is responsible for this. They're gonna say, oh no, you're the public officer, so you must take responsibility for this. So I'm not saying know everything. I'm just saying at least know the basics of what is there. Know when your deadlines are. Know if your accountant is going to say, no, you're actually supposed to submit 0, and you know in this period you made 1 million rand, why are we submitting 0? You know, so that you can also keep them accountable, and you don't want to get into trouble. So just to go into the detail of the different tax types, for companies, there are 3 tax returns that are due by you as a business owner. As you all know, for income tax, you automatically are registered for income tax as a business owner. Every company is registered for income tax. So there's 3 returns that you need to submit. 2 of those are provisional tax returns. So I always explain provisional tax. It's similar to the pay-as-you-earn collection system. This time, it only happens twice a year. So just similar to pay-as-you-earn, your employer withholds pay-as-you-earn on your behalf every month. You as a business owner, what happens is that you make an estimate of what your profit will be at the end. So right now, if your financial year end is February, we are already in the 2026 tax year. So every 6 months, you need to make an estimation of what your profit will be at the end of 2026 financial year end. So you're just estimating so that you can put money in your pocket, or let's call it SARS pocket, so that when you eventually submit your return, there is money in there for you, and there is no sort of like shortfall, even if it's a shortfall, but at least it's not a lot of money. Because when you submit your actual return, you're using actuals, but when you do provisional tax, you are using estimates, right? So you'll do those 2 returns. If your financial year end is December, your provisional tax return will be at the end of June, at the end of December, and then you have a year within which you need to submit your actual return, which you use your financial statements that you prepare on a yearly basis. So your actual return, you use your financial statements that you prepare from your accountant, and if there is a difference between your estimations and your actual tax return, you either pay in if you've made a lot of payments, or if you've overestimated, then there'll be a refund that is due to you. One thing that is important is that you need to make sure that your estimates are as accurate as possible, especially for people who are above R1 million, you know. So your estimation should be as accurate as possible. It shouldn't be like, let's say, for example, you made 100 million rand and you only estimated that you're going to make 20 million rand. You're going to get a penalty. At least it needs to be 80% of that income needs to have been there. At least 80 million should have been there, not just 20 million. As I've mentioned, all companies are registered for income tax. When you submit your return, it's either, in fact, it's not either. It is an ITR 12 return that you submit using your financial statements. And all companies, if you're not a small business corporation, or I'll chat about that very shortly, if you're not a small business corporation or you're not registered for turnover tax, you pay a flat rate of 27% on your profit, business profit, I remember I mentioned, or your taxable income. So for VAT, once you register for VAT, SARS will give you a category that you need to submit. So for example, if I register for VAT and SARS says, I have to submit my return every January, March, I need to stick to that category that I have selected. There's different types of categories. There's ones where you submit every 2nd month. For people who are earning above 30 million in a year, their category is every month. There's a category for farmers, which is every 6 months, and there's also a category for once every year. So just most VAT vendors, you'll find that they submit every 2nd month. Yeah? So how do you how do you register for VAT? It's compulsory to register for VAT once your turnover sales, other people call it revenue, exceed 1 million rand within a 12-month period. Just look, I would say every month make an estimation that within the past 12 months, have I made 1 million? If you have, then it's time for you to register for VAT. Ne? And if, for example, you are doing business with people who would consider you, I know other business would only consider you if you're registered for VAT, then you can register for VAT if your sales, turnover, or revenue exceeds 50,000 Rand. So for you to register for that, SARS will want to see that you have invoiced not only for 50,000 Rand, but there is proof that you have, there is money that was paid towards that 15,000 Rand. So it's not just the invoicing, but they want to physically see in your bank statements that there was that 50,000 Rand from sales, right? So as I had mentioned, once you're registered, you charge VAT, you can also claim VAT, and then that's that difference, I'll call it profit, that difference between what has been charged, what has been claimed, that's what you're going to pay to the receiver, or the receiver will pay you back. If you have overpaid, they'll refund you. If you've, for people, for example, who are in the service business, because salaries are not necessarily, well, in fact, not even necessarily, salaries do not attract any VAT. Most of the time, people who are in the service industry, you'll find that they pay a lot of VAT when the VAT is due, except unlike people who are selling goods and services. And then for pay-as-you-earn, you submit your return every month. You have to submit your return at the end of the month, and it's payable by the 7th of every month. And every 6 months, then you also have a responsibility to make a reconciliation that the tax that you paid over every month, who does it belong to? So every 6 months, you'll do that reconciliation, and then out of that reconciliation comes the IRP5s that you give over to your employees. So if your employer does not do that reconciliation, or you as an employer do not do that reconciliation, then your employers won't have IRP5s. And we know that's not right, especially if you have been collecting taxes from them. So it is an important thing to do. So if you have employees or you as a director, the salary that you receive exceeds 7,979 Rand. If it exceeds that amount, then you then qualify to start paying taxes. So then you need to register for pay-as-you-earn within 21 days of knowing that you are liable for it. Don't forget as well that over and above collecting pay-as-you-earn, you must also collect UIF, which is you contribute 1%, the employer also contributes 1%. You can pay that over to SARS, the UIF, as well as if your remuneration, your total remuneration as an employer, like all your employees, you exceed 500,000, it's compulsory also to register for skills development levy. So they all go together. If your remuneration package exceeds 500,000, then it will be pay-as-you-earn, UIF, SDL, which you pay over to SARS. You must pay it every month by the 7th, otherwise there's penalties. Okay, now we're gonna go into the frequently asked questions. Okay, so the first question I get, I just want to see across the room, how many of you have you asked this question to your tax practitioner, accountant, or whoever, especially when you're starting in business? How do I pay myself? Quite a lot of you, okay. How do I pay myself as a director? So there's various forms in which you can pay yourself. The first one being the obvious one, which is a salary. So as you know, if you are a director, director's fees attract pay-as-you-earn. So of course, if you are getting an amount on a monthly basis that exceeds 7,997, then you need to register for pay-as-you-earn, especially if you're the only person in the business, right? You need to then start registering for pay-as-you-earn. Secondly, is that you can pay yourself in the form of dividends. The trick with dividends is that you only pay yourself dividends, or rather, a company can only pay dividends after paying taxes from its profit. So once the business has paid tax, then only can you distribute dividends, because you can't distribute dividends if there's no profit. So that's the only catch with dividends. I would also say if you are paying dividends, it would you need to consider the tax rates that are applicable. For example, for dividends you pay 20%, but remember that you only pay dividends after you have paid company tax. So you also need to factor in that percentage that the company pays to see what actually is your effective tax rate that you are paying dividends with, as compared to you paying yourself a salary. Because obviously if you're paying yourself a high salary, the more you pay yourself a salary, the more taxes you're going to pay. Unless if you keep your salary at less than 7,979, if you keep your salary at that rate, then you won't pay taxes. But if you go above that, then just know that pay as you earn kicks in, right? And then the third one, which is a very common one, is that people, directors, take loans out of their businesses. And the issue that I have with these loans is that they're never paid back. Directors take loans and they don't pay them back. So I always say, make a decision. Is it really a loan if you're not gonna pay it back? If you're not gonna pay it back, then it's not a loan. Then why are we calling it a loan? And I think also it is because you are not informed by the fact that most of the time, actually, these loans don't bear any interest. You'll just say, I'm borrowing myself this much so that I can avoid paying taxes, and I'm not charging myself. Anyway, it's my money. Because, anyway, you are the one working, so it's your money. But remember that you and the business are two completely different people, you know? So if you take money out, you as a director, you're going to pay tax. If the company pays you a salary, the business will have that business expense, but it means that the ultimate tax will be paid by you. So whatever money that you take out, just understand what you are doing. Yeah? With these loans, the tax implications for these loans is that if there's no interest that is being charged on these loans, then SARS sees the portion of the interest that you're not paying. Because it's a loan, every loan must have interest. If you're not paying any loan, it means there's a relationship there between you and the company. You are a connected person. Obviously, you'll get a benefit for charging less interest because you're connected to this company. So if you are charging a loan, let's say for example, you are charging a loan at 1%, né? And the prime is 5%. SARS is going to say that difference between the prime and that 1%, I'm going to call it a dividend because you're not paying interest. So why the company is supposed to get interest? You guys are two different people. You're not the same person. Even though you're a shareholder, you are two different people. And this company has to have some sort of interest from a loan that it gives out. So because you're not charging you're not charging any interest, or the interest is not at market value, then I'm going to call that a dividend, and then the company has to pay that portion of the deemed dividend. They call it a deemed dividend. Yeah? So when do you register for VAT? That's the first question. So when do you register for VAT? You register for VAT, like I said, if it's compulsory for you to register for VAT. You have a contract that is coming up and they say, hey, we want to give you a contract. You're not registered for VAT, but the contract is already signed. And the proceeds of that contract is going to be above $1 million. You can go to SARS and say, please register for me for VAT. You'll just then have to consider with whoever you are contracted with, maybe then you just need to adjust the pricing of your contract to just include the VAT portion, right? If you're doing business with other people and they want you to register for VAT, remember those people are not the only people that you're going to be doing business with. VAT is very administratively intense in terms of you have to submit every second month if you're starting out. Number two, it's very cash flow demanding, especially if you're in the service business, because like I said, salaries do not attract VAT, entertainment does not attract VAT, there's so many other things that don't attract VAT. So consider the type of business that you are in before you make a decision that I want to register for VAT. Is my business in the position to be registering for VAT? Can I afford to pay VAT on a monthly basis? If I receive an invoice, will I be able to put aside money so that I can service that VAT when it is due? So those are the kind of conversations that you need to have. It shouldn't just be, oh no, I met with, I don't know, ABC Trading, and they say, if I don't register for that, then they won't give me a contract. Next year, you're not working with ABC, then what? So consider all those things before you do register for that. Yeah? The other thing that we commonly get is, I want to buy an asset. You can also lift up your hands. I want to buy an asset, and I want to use it. For example, I want to buy a car, or I want to buy a house in my business name. And that car or that house is for me, it's not for the business. Can I do that? I heard somebody say that it's a benefit, I'm gonna get a benefit for doing that. So I'm gonna talk about two different positions. If the business is the one, of course, that is buying that asset, the business can then deduct the interest. If you're buying the asset on a loan, the business can deduct the interest. Also, if that asset has, for example, a depreciation, let's call it depreciation, or wear and tear, the asset can then deduct. So yes, from the point of view of the business, it is the benefit. There is a benefit to that. Also, if you have assets on your balance sheet, it's a good thing for the banks. I think the banks think that you are much more credible because obviously you know they can take something in the event that you don't want to pay. So in that sense, yes, it is a benefit. But now you have this asset that you've either given to your employee, or you as the director, you are using that car. You have bought a Mercedes-Benz, and this business now, you don't even go to site, this car is for you, or this house is for you and your family. It's got nothing to do with any other thing. Those benefits are allowed. I'm not saying they're not allowed. It is allowed, but then it has tax implications. So the tax implication is that we call that a fringe benefit. So it's a non-cash benefit, like a salary is cash. That benefit is not cash because your employer is giving you an asset to use for whatever. They don't care what you're using the asset for, but they are giving you a benefit. Like executives in big companies, they get different types of benefits. It might not be cash, but they get benefits. It's allowed. It's just that then on their payslip, they'll calculate a cash equivalent of the benefit that they are getting out of that asset, and then that benefit will then increase your remuneration. And what that does is that you pay more tax. So it's a fringe benefit, it's good. It's good that companies give benefits to the employees, but just know the tax implications is that it's another sort of income line on your salary, and then you pay more taxes. Okay, and then, I hope you understand that. Okay. Okay, so when must I register for Pay As You Earn? So if you are an employer, you've just employed 3 people, or let's call it 5 people, you've employed 5 people. 3 of them are young, new, upcoming, other is somebody that's been in your business. When do you register for employees' taxes? You register for employees' taxes, like I said, if you know that your employees are gonna get an amount above, let's call it 8,000, because it's 7,997, that's almost 8,000. If you're gonna employ someone who's gonna earn above that 8,000 rand, just know that they're gonna pay tax, and you have a responsibility to withhold Pay As You Earn. But then SARS has an incentive for employers to employ, or rather to alleviate the unemployment statistic within South Africa. So they've implemented an incentive called employment tax incentive. So it says that if you employ somebody between the ages of 29, and those people earn 2.5 from the 1st of April, 2,500 Rand and 7,500 Rand, then I'm going to incentivize you on your cost of employment, meaning what you need to pay towards Pay As You Earn. So if, for example, your Pay As You Earn bill was 5,000 Rand, and you employ 3 people who meet those requirements, they're not connected to you, meaning they're not your cousin, your sister, it's people you don't know. People you don't know, they're not domestic workers, then there is an incentive that we will cut cut off a portion of your pay as you earn. We'll cut off your portion. So if your pay as you earn is 5,000 rand, we'll cut it off. Then you just pay 3,000 rand. So bear in mind, if you want to employ people, there is that incentive that is there. I would also encourage you to use systems like Simple Pay. I think there's other systems that are there for you to help you with those calculations. They pre-calculate all these things for you, so you don't need to do all the math, especially if you know you are somebody who's constantly employing people. Ne? And this incentive runs over 2 years. There's a benefit for year 1, there's a benefit for year 2. So what I would also advise employers not to just do this because there's an incentive, but just do it because it comes from the goodness of your heart. We are Christians at the end of the day, and we want to see people build. And if we see ourselves as builders as well as kings in the kingdom of God, then we must not just do things because it's there. We're doing for sustainability. We want to see ourselves, even though I'm at a point where I'm starting out as a business, but I don't want to always stay here. So your business is not gonna grow if every 2 years you're changing people. It's not gonna, every 2 years you're changing people because you want to maximize on that benefit. Keep the people. If the people are good to you, keep the people, Okay, so what are the incentives that are available for business? Firstly, I would say know the type of industry that you are in. Understand the industry that you are in. If you don't understand, go back to your tax practitioner accountant, ask them if there are incentives that are specific to the industry that I am in. For example, there's incentives for people who are working in special economic zones. There's incentives for people who work in the mining industry, construction, research and development, people who are doing manufacturing. If you've just bought solar products or items, for your business, there is an incentive for that. Know what incentives are available for your industry, because at the end of the day, we don't want to pay more tax than what we are supposed to pay. So if SARS is not going to say, oh, actually, you missed something, if you tell them, I'm supposed to pay 5 million, you're going to pay 5 million. They're not going to say, hey, you're in manufacturing, you were supposed to consider this. No, they're not going to do that for you. Secondly, if you are buying assets, know, in simple terms, people call it depreciation. There's also tax allowances for assets. Know the rates that are available to you, even for industry. Know what type of assets you can depreciate. I'll call it depreciate, or the allowances that are available to you. Even if you are buying a building, I know there's people who are in property as well. Know what incentives are available for you in order for you to get tax allowances. And then the last two incentives that I want to talk about is small business corporation as well as turnover tax. So small business corporations is, like I said, companies pay tax either 27%, or either you are a small business corporation or you are registered for turnover tax, right? Turnover tax is for people who are earning, or rather their sales are less than 1 million rand. 1 million is the cap. You just need to register at the branch. It's also administratively intensive because you need to go to the branch. And we know with the appointment system at SARS, it's not easy. Sometimes they give you an appointment 3 months from now. But it is something that is there. It's paid over 3 times. And with turnover tax, they don't consider your expenses. You pay tax on your turnover, right? You apply for it at the branch, so it replaces income tax, VAT, provisional tax, capital gains tax. If you have sold an asset within your business and you are on the turnover tax regime, you will then pay 50% of the proceeds on that asset that you have sold. And for dividends tax as well, there's a 200,000 rand threshold. So if you have dividends more than that, then there will be dividends. That's turnover tax. I just want to talk more about small business corporations. So for small business corporations, you can qualify for small business corporations. So the rate for small business corporations is that you start paying taxes once your business profit exceeds 95,750,000 Rand. So that's the nice thing about it. With normal tax is that you pay tax from the first Rand. With small business corporation, you pay tax if your profit exceeds 95,750, right? But there are rules. You can't just qualify for that. All shareholders need to be natural persons, meaning you can't have companies that are shareholders. Number 2, your income, gross income, sales, revenue, whatever you want to call it, should not exceed 20 million. Your company should not be a personal service provider. So what I mean by personal service provider, there's certain incomes that qualify to be personal service provider. It's people who are accountants, lawyers, you're an IT, draftsman, education. There's a list of the type of people who cannot qualify for this. But they will only qualify if they employ more than 3 or more people who are not connected to them, meaning it's not your family. And yeah, so if you employ more than 3 people, then you'll qualify for this. Also, another requirement for this is that not more than 20% of this income, part of the 20 million, should be from investment income. So it's more than 20% of this income should not be investment income. Not more than 20% of this income should be from a personal service, unless if there's 3 or more people that are employed and they're not connected to you. So that's the benefit in that. So the rates for the small business is that you start paying taxes at 95,750, and if you exceed that amount, then you start paying taxes at 7%. So you can already see there's a difference between 27% and 7%, and you only get to 27% if your profit exceeds 550,000. So it's a great benefit for people who are small and they're not shareholders of other businesses, and you also meet all these requirements. Just know that this is a year-on-year, so you need to do it on assessment. You can't say, because I qualify 1 year, every other year I qualify for it. And just to close, with regards to correspondence that you receive from SARS, make sure that you attend to your correspondence, respond to your communication. If you receive an audit assessment, make sure that you correspond with the auditor that is responsible. If you don't have, request representation. Keep your documentation for a period of 1 year. Make sure that you adhere to your audit timeframes. If you're not happy with an assessment that SARS has issued, they say that this money is not a deduction, whereas you know for sure that is a deduction. Make sure that you object within 80 business days. If you're fine, then make sure that you pay within the 30 days that is allocated, so that there's no interest and any penalties that are due. And lastly, with regards to if you can't afford, make sure that you can make a payment arrangement, either at SARS on e-filing, or alternative, you can go to the branch if your debt exceeds 100,000. And lastly, one last thing is that, I don't know if taxpayers know that if you really know that you cannot afford tax debt, right? You know for sure that you can't afford. You can then go to SARS and ask SARS that, please, can you compromise a portion of my debt? Let's say, for example, you owe 200,000 Rand, and you know for sure you don't have assets, you have nothing. Even if they can say, no, they threaten, we're going to take your assets, you know you have nothing. You can ask SARS, can I pay a lump sum, maybe, for example, 50,000 Rand, and then the 150,000 Rand, please compromise. Obviously, they need to make a determination that you cannot pay. It's not just something that they will accept. They'll go through everything. They'll make a determination of what's your net asset value. Can you surrender some of your assets? They'll make all of that. So you can't just get to a point where you say you can't afford. Know that you can't afford. And once that is done, then they can give you okay, write off some of your debt. You pay off a portion of the debt that is due to you. I think I have reached. Thank you once again.